Welcome to your daily market briefing. Here are the key headlines shaping today's markets. 1. U.S.-Israel strikes kill Khamenei, Hormuz closed, oil spikes. 2. Hot PPI caps, February sell-off, stagflation reprices rate path. 3. OPEC plus 206,000 barrels per day, hike insufficient to offset Hormuz closure. After the headlines, you'll find a global market snapshot and a forward calendar of what to watch. Before we turn to today's stories, a short introduction. Daily market briefing. Think ahead, every market day. Subscribe to stay focused on what matters. Please keep in mind that all content in this video is for educational purposes only. It provides market context, not financial advice. 1. U.S.-Israel strikes kill Khamenei, Hormuz closed, oil spikes. Primary asset classes impacted: crude oil, Brent, WTI, global equity indices, S&P 500, Euro Stoxx 50, Nikkei 225, Hang Seng. Safe havens: gold, UST 10Y, CHF, JPY. Energy equities, EMFX. Shipping and defense sectors. What happened? U.S. and Israeli forces launched coordinated strikes on Iran Saturday, killing Supreme Leader Khamenei and targeting over 1,000 military sites. Iran retaliated with missiles against U.S. bases, UAE airports, and Gulf infrastructure. The Strait of Hormuz is effectively closed, with tanker traffic plummeting and major oil firms halting shipments through the chokepoint. Why it matters. This is the largest Middle East military escalation since 2003, directly threatening 20% of global seaborne oil supply. Hormuz closure disrupts crude, LNG, and chemical flows from Saudi Arabia, UAE, Iraq, and Kuwait. Oil futures jumped 8 to 13% in Monday trading. Brent approaching $80. Flight to safety compresses Treasury yields and lifts gold above $5,370. OPEC Plus responded with a 206,000 barrels per day April increase, but analysts deem it insufficient to offset prolonged disruption. Stagflation risk rises. Key numbers to remember: approximately 13 million barrels per day of crude normally transits Hormuz daily, approximately 25% of global seaborne oil exports. Traffic down 70% plus since Saturday. Brent spiked to $82.37 intraday Monday before settling near $78.70. WTI at approximately $72 plus 7.25% from Friday, close. Gold surged approximately $100 per ounce to approximately $5,375, approaching the record daily close of $5,417 set in late January. What to watch next? Iran's response over the next 24 to 72 hours is decisive. Barclays sees Brent at $80 under sustained disruption. Goldman and RBC warn $100 plus if Hormuz stays closed. Monitor U.S. Navy convoy operations, tanker insurance rates, and congressional authorization for combat operations. If Hormuz reopens quickly and retaliation subsides, oil retreats towards $70. Prolonged closure drives Brent above $90 and triggers global recession pricing. 2. Hot PPI caps, February sell-off, stagflation reprices rate path. Primary asset classes impacted: U.S. equities, S&P 500, Nasdaq, Dow, Russell 2000, UST 2Y and 10Y, Fed funds futures, DXY, rate-sensitive sectors, tech, small caps, REITs. What happened? January PPI printed 0.5% month-over-month versus 0.3% consensus, with services surging 0.8%. The S&P 500 fell 0.4% on Friday, closing February down 0.9%. The Nasdaq lost 0.9% for a 3.4% monthly decline, its worst since March 2025. The Dow dropped 1.1% to 48,978. The 10-year yield fell below 4% for the first time since mid-2024. Why it matters. Hotter wholesale inflation challenges the soft landing narrative and reduces near-term Fed cut probability. Markets price 2 cuts for 2026, but some strategists now see 0. Service sector inflation at 0.8% and housing costs remain entrenched, suggesting tariff pass-through is accelerating. Combined with the AI sell-off and rising geopolitical risk, equities face a triple headwind entering March. The 10-year yield falling below 4% while inflation runs hot creates a bond-inflation disconnect that must resolve. Key numbers to remember: 0.5% PPI month-over-month headline versus 0.3% consensus. Services plus 0.8%, the largest component driver. S&P 500 minus 0.9% for February, Nasdaq minus 3.4%, worst month since March 2025, Dow plus 0.2%. 10-year Treasury yield closed at 3.97%, first weekly close below 4.00% since mid-2024. What to watch next? Friday's non-farm payrolls is the week's pivotal macro event. Consensus expects 160,000 jobs. A miss amplifies stagflation fears while a beat complicates the rate path. ISM Manufacturing today and ISM Services Wednesday provide leading indicators. Core PCE shapes the Fed's preferred inflation gauge. If payrolls disappoint alongside persistent inflation, the Fed faces a policy dilemma, pressuring equities and steepening the curve. 3. OPEC plus 206,000 barrels per day. Hike insufficient to offset Hormuz closure. Primary asset classes impacted. Crude oil, Brent, WTI. Energy equities. Petrochemical sector. Middle East sovereign bonds. Inflation-linked bonds. TIPS. Commodity currencies. CAD, NOK, RUB. What happened? 8 OPEC Plus nations agreed Sunday to raise output by 206,000 barrels per day from April, resuming unwinding of 1.65 million barrels per day voluntary cuts paused since January. The increase exceeds 137,000 barrels per day consensus, but represents less than 0.2% of global supply. The decision followed emergency consultations after U.S.-Israeli strikes and Hormuz shipping disruptions. Why it matters. The larger-than-expected increase signals OPEC plus readiness to deploy spare capacity, estimated at 3.5 million barrels per day, concentrated in Saudi Arabia and UAE. However, analysts broadly assess it as insufficient to offset a prolonged Hormuz closure, which handles approximately 13 million barrels per day. The group retained flexibility to pause or reverse. The production increase is largely moot if Hormuz flows do not resume, reinforcing that geopolitical risk now dominates oil pricing. Key numbers to remember: 206,000 barrels per day April increase versus 137,000 expected. Range discussed was 137,000 to 548,000 barrels per day. 3.5 million barrels per day total OPEC plus spare capacity. Saudi Arabia and UAE hold the largest share. 13 million barrels per day normally transits Hormuz. Even partial closure dwarfs any feasible production offset. What to watch next? Track daily Hormuz vessel transit data for real-time supply disruption assessment. Saudi and UAE ramp-up speed determines how quickly spare capacity reaches market. Monitor whether OPEC Plus convenes an emergency session to activate the full 2.2 million barrels per day reversal. If tanker traffic normalizes within days, Brent retreats below $75. Sustained disruption supports crude above $85 through Q2 and forces strategic reserve releases. This global market snapshot is designed for quick reference. You may pause the video to examine the data more closely. This forward calendar section is designed for quick reference. You may pause the video to examine the data more closely. Thank you for watching today's briefing. In markets, understanding the field matters as much as making the move. And that's the perspective we aim to provide. Subscribe to Daily Market Briefing and turn on notifications to stay focused on what matters every market day.